Hey, you wonderful people out there. Chris from the Business Report Show. Hope you had a great investing week. Before I begin, make sure to hit the subscribe button. And if you do enjoy the video, make sure you hit that like button. Every little bit helps. As a disclaimer, I'm not a financial planner or advisor, and everything I say on this video is just my opinion and for education purposes only. Make sure to seek a professional before investing. I am super excited about launching this Wealthsimple Small Cap Stock Challenge where we are going to work together and build out our small cap portion of our investment portfolio. Now, for some of you just getting into the investing game, this may be your only portfolio, and that's okay. The important thing is that you just start investing and you start learning how to trade. For those of you who have started building up your portfolio, make sure to check out my video on proper asset allocation to understand why I call this my small cap portion of my portfolio. Essentially, I allocate about 15% of my portfolio to small cap stocks, so we'll be taking a chunk of that and using it for this Wealthsimple Small Cap Stock Challenge. So why Wealthsimple? Well, I've been using the platform now for a few months, and the biggest difference for me is the customer service and ease of using this platform. I use other platforms, and frankly, I'm in the process of moving some of my money from those platforms over to the Wealthsimple because they're just that much better. So just to be clear, I'm not sponsored by Wealthsimple, so this is just purely my opinion about the platform. Now, another reason why I'm using Wealthsimple for this challenge is because of the no-fee trading. When you're just starting out and you're buying 1 or 2 shares of a company, trading fees can take a big chunk out of your returns. So when I started trading small cap stocks way back when, before Wealthsimple was around, I was already down few percentage points just getting in on the trade, let alone needing to recoup that plus make gains to cover the fees on the sell side. So one thing I will say, however, about Wealthsimple is that because of their business model of zero fees, they are making money on the incremental differences between the bid and ask price and what their clearinghouse platform has listed for the stock. So basically what this means is that you are paying a slight premium to buy and sell the stock versus what you would normally do on some of these other platforms. Wealthsimple relies on volume and scale to generate enough revenues for them to run their platform. This still isn't as much as having to pay those trading fees on the other platforms, however. The other thing I will note is because Wealthsimple does rely on this business model of volume and the bid-ask difference to generate the revenue, some, but not all, of the small cap stocks, they may not be available for us to trade for this challenge, specifically, stocks that have lower volumes or they trade under 50 cents per share. Okay, so to prepare you for this adventure, please note that small cap stock buying will have its ups and downs, and sometimes you will have to play the stock tight, meaning take the gains quick, and sometimes you may end up finding that one of them is a unicorn and it becomes a high growth stock that you may want to hold for the mid to long term. Now, because of the lower share prices, there are often big swings as well. Sometimes even a 10-cent movement downward can mean a 20% drop in your portfolio, so be prepared for those swings and try and set your emotions aside when buying and selling small caps. But this is great. We're going to do this together. Not to further scare you, however, but my experience with small cap stocks is that some of them end up going to zero. So there are some risks you should be aware of, but this is why we're only using a small portion of our portfolio and our cash so that if we do take a hit, we're not out of the money we need for groceries. So the goal of this challenge is to try and put whatever spare change we can have into the account and accumulate enough cash to get a very diversified portfolio of stocks. This will help you build your routine and perhaps kick some of those bad spending habits aside. Now, ideally, we will probably get 10 to 12 stocks in this portfolio at any given time. And it's also not a bad thing to have extra cash sitting on the side, as having this cash will give you an opportunity to buy the dips or new opportunities as they come. All right, enough of me talking about all this. The first stock I'm adding to my portfolio comes from the cannabis sector, no surprise. If you haven't checked out my cannabis video yet, make sure you do so. I like the long-term outlook of this sector, especially as the new administration in the US is looking to decriminalize marijuana. When this market does fully open up, I do expect the Canadian cannabis companies will be in a great position to hit the ground floor running right away. So the stock I just added is HITI Inc., ticker symbol HITI. HITI is a retail-focused cannabis company, and I like that because it minimizes the intensive capital structure often needed by producers in this space where they have to build up these massive facilities. So I got in on the stock today, Friday, at 76 cents. I like HITI because their financials are turning around. Quarterly revenues have gone from 11 million back in 2019 to most recently 23 million, with positive net income in the last quarter. A few days ago, they also announced that about $20 million worth of convertible debenture holders have converted their debt to equity. So this essentially wipes out the big portion of the long-term debt they had on their balance sheet. Now, if you do look at their charts a few days ago, you saw that big dip because those unit holders were converting to equity and they had certain pricing provisions when they got in. And the other thing was there were also a series of warrants that a lot of those unit holders had, and they fully executed those warrants to get in on the shares. And that's really positive because basically it says the majority of these shareholders have a positive outlook for the company and they want to get in on the shares. Now, the other thing the warrants did was it provided HITI with an injection of about 3.3 million in capital. So overall, I like the prospectus moving forward in the near term. Now, one final thing I like about HITI is grasscity.com. It's their online e-commerce store. It is the world's largest online store for consumption accessories. In 2020, they had over 26 million site visits, of which 77% of them came from North America. And the site has more than 560,000 customers in its database, approximately 1 million receipts in its mail database, and over 6.8 million current forum members, including 310,000 dedicated readers of its weekly newsletter. So I tell you these stats because I think HITI is a very strong brand, and if they continue growing in this segment on not only on the e-commerce but the retail stores, as things do open back up after the COVID restrictions are lifted, I think there's a lot of very positive prospects for the retail cannabis sector. Well, that's it. So officially welcome you guys to the Wealthsimple Small Cap Stock Portfolio Challenge. I do look forward to hearing from you, so make sure to add down below in the comments of other small cap stocks you have in your portfolio or you're looking at, and maybe we'll add those to our portfolio together. As mentioned before, I'm not a financial planner or investment advisor, so do make sure to consult with a professional before investing. Don't forget to hit that subscribe button and that like button. Every little bit helps. Thank you for watching the Business Report Show. Remember, always be learning, always be investing. I'll catch you in the next video with the next stock.